Hey, good afternoon. Today is May 27th, 2022. We're looking at a 2000 tick chart for the E-mini S&P 500 futures market. We've got a 21 EMA here in blue, 9 EMA here in cyan, 200 EMA in magenta, and a MACD indicator down here at the bottom. But we primarily focus on using technical analysis, price action, and overall market context in order to place our trades. Take a second, real quick. Like the video, subscribe to the channel, turn on post notifications so you know exactly when I post this content. And let's get right into the video for today. We want to keep it nice and simple. It's Friday. We have a long weekend ahead of us. I want to just quickly go over some of the trades that I saw today as well as the trades that I lost on. I ended up going 2 and 2 for the day. I had 2 wins here and 2 losses as well. We'll go ahead and get right into that. Make today's video nice, simple, easy. As we normally do on this channel, we draw a level of resistance up here at the top, level of support down here at the bottom. And as market opened, we had a short-term trend that was working down, break, attempted a new low. It was a nice higher low right off the 21 EMA. 9 EMA had continuously kept above the 21 EMA. So that could have been a nice higher low trade that you could have taken. You would have seen prices continue to come up. And what we had was a new swing low here. Prices came up for a first entry short, and then prices came all the way up for a second entry short. Now, while this is a second entry short, I wanted to reset the count when prices came back to the 21 EMA here, the support level off this channel that's working up. So prices came up and down for a first entry short, and then prices came up and ticked down for a second entry short on this doji candle here. Prices reversed. You're entering 1 tick above this signal bar, and your stop loss is going 1 tick below the bar that you entered on. Now, I wasn't able to capitalize on this trade, but prices would have came up and flushed right through. You would have gotten a scalp, potential runner as well, and prices continue to trend higher as we have the separation between the 9 EMA and 21 EMA. Now, after a trade like this happens, if prices continue to go up, you could potentially continue to capitalize on catching stops as prices continue to rise. But you have to understand that subsequent scalps can be inherently risky. As prices come up, we get more separation from the 21 EMA. At any point, prices could reverse. So you just have to take that risk into account. And that made this trade aggressive right here. So after this trade played out, I reset the count here. Prices came up and down for a first entry short. Prices came up, down for a second entry short that triggered below this bar. So if you're looking to catch stops, your entry is going to be 1 tick above this signal bar. People are going short, and as prices reverse, you're catching those stops and riding that momentum up for a scalp. Now, this is one of those areas. Do you put your entry order 1 tick above this bar here, or do you put your entry order 1 tick above this swing? That's really up to you and how much risk that you want to take on. If you want to be in that trade a little bit sooner, you're going to put your entry order 1 tick above this bar here. If you want to wait it out a little bit more, you can put your entry 1 tick above this swing here. Entering at 225, prices would have came up to 450. That's a 9 tick move. So if you're going for 8 ticks, you would have been out for those 2 points. Prices come back down to this 21 EMA. I don't necessarily have it drawn, but you have somewhat of a short-term trend line here at play with a break looking for a new low. We get a higher low opportunity, second entry long, first entry long, second entry long right off 21 EMA. Additionally, this signal bar is a higher low, so it is a second entry long. I marked it as aggressive. You do have a few overlapping bars here, but price action is showing we're making higher lows, higher highs, and when we get that higher low opportunity, second entry long, you could take that. So prices consolidate for a little bit before pushing up. I reset the count right here. Prices came up for a first entry short, and then prices came up second entry short trigger below this bar. So you have your entry order in place, but as prices come down, you get that close below the 9 EMA. Additionally, you can look down at the MACD, losing that bullish momentum. So you're taking that trade out, and essentially you're just restarting the count from there. So restarting the count off the swing low, prices came up and down for a first entry short, prices came up, down for a second entry short if there's a trigger below this bar, and there is. So your entry order would go 1 tick above this signal bar right here. Now, as prices play out a little bit, we don't get a close below this EMA, this 9 EMA. So you have your order in place 1 tick above. Now, if prices congest a little bit too much, you can take your entry order out. Additionally, the MACD isn't showing as bullish momentum as we like, but prices are continuing to chop up. Higher lows and higher highs are being made in this uptrend. You get this nice bullish bar that signifies buyers are coming into the market. So you could potentially keep your order in place there. You'd be in this trade. Your stop loss is going 1 tick below this signal bar right here, and prices never come back to it. As prices continue up, you're out for a scalp and potential runner. So prices came back down. You get that third, potentially fourth touch of this channel. channel, you have this nice channel in play. It starts to lose that momentum as prices are not reaching back up to the top of this channel. So we get a clear break looking for a new high. And when I'm looking in here, are there any trades that we could take? The thing that was keeping me out was all this bearish momentum that the MACD was showing. I was just kind of hesitant to take any longs here, but I was also hesitant to go short. I was waiting for 9 EMA to cross over 21 EMA. But prices do continue pushing up. You get that new high before prices come back down to the 21 EMA. It starts to flatten out as there's a little bit of indecision. Prices don't know exactly what they're going to do. Now, this was my first trade of the day, and I lost it just because I didn't manage my stop loss well. So just to show you what I was looking at, we had this new swing high as prices come down and up for a first entry long. Then prices come down and up for a second entry long if there's a trigger above this bar. There was a trigger above this bar, and so I had my entry order one tick below this signal bar right here. I had my stop loss one tick above this signal bar right here. So as I entered the trade, I moved my stop loss one tick above this bar here, even though this wasn't the correct signal bar. This signal bar was the correct signal bar because this is where prices were triggered. So technically, my stop loss should have gone one tick above this signal bar right here. Prices came down for 7 ticks. It missed my price target by literally one tick before reversing, stopping me out as my stop loss was right here, but it made a double top with this signal bar here before prices pushed down and I would have gotten that scalp. So that was kind of a frustrating loss. I messed up my stop loss. It really should have gone one tick above this signal bar right here, and that was a mistake that costed me. Additionally at the time, I also saw the ATR was about 2.5, and when you look at the number of ticks in this bar, there are 10 ticks. So that's 2.5 points on this bar alone. It's matching up with the ATR. I think that if the ATR is low enough, I shouldn't be going for 8 ticks. I should have probably gotten out for 6 ticks instead, or at least have some sort of safety measure where if prices go down a certain amount of ticks, I have to bring my stop loss to break even. It's still something I need to explore, but that was a loss I had. Now, what I started to see was this separation between the 9 EMA and 21 EMA continue to hold. We have the new swing high here as prices come down and up for a first entry long. Then prices came down, up for a second entry long that triggered above this bar. So I had my entry one tick below the signal bar. Prices initially came down and then up. Now, the way that this bar formed, after prices reversed and came back down, I was in this trade and I was out for a quick scalp. I had this channel drawn in as prices continue to hold. MACD is showing bearish momentum here. That was a nice, quick, easy win. As prices chop along here, we have a break of this channel, potentially looking for a new low. Counting the new swing here, prices came up and down for a first entry short. Prices came up to the EMA, through the EMA, second entry short triggered, doji bar, prices were holding above EMA. I was slightly anticipating 9 EMA to cross over. What I was looking at was the transition from bearish momentum up through bullish momentum on the MACD. So a crossover happened, looking to continue riding prices higher if prices continue to hold. So I had my entry order one tick above this signal bar right here. As prices came up, I was in this trade. Stop loss is going one tick below this signal bar, and I continue to ride prices up for a scalp. Now, unfortunately, I really let this loss get the best of me. I was upset by the way that I managed that, and so I was kind of looking for another trade, and I really wanted to just get another win and call it a day. So what I did was I reset the count here. Prices came up and down for a first entry short. Prices continue to come up, down for a second entry short trigger. So once we got that second entry short trigger, there are people that are trying to go short. I had my entry order one tick above the signal bar right here, and prices were moving very slow at this point, started to get congestion. What I liked was there was separation between the 9 EMA, 21 EMA. MACD is still showing a bit of bullish momentum here, kind of zooming out. We are in an uptrend, but once we started getting stacked bars here, we didn't get a close below 9 EMA. But the other thing to remember is it's Friday before a long weekend. ATR was very low at the time, not a lot of volume in the market. I should have taken all those factors into consideration before placing this trade, but I wanted to end the week on a high note. I entered this trade by one tick before prices came back and stopped me out. My stop loss again, one tick below this signal bar. With this uptrend that we have in play here, we have congestion, break of this channel, potentially looking for a new high, but with this congestion, I probably should have pulled my trade out. But again, it is what it is. I'm continuing to learn. I'm not a perfect trader. Those are my 2 wins, 2 losses. I finished the day red, unfortunately, but I finished the week green. So glad about that. Next week will be a new week. I didn't really pay attention to too much else afterwards. I mean, you have this new swing here. Prices came up down for a first entry short. Prices came up down for a second entry short. Once that triggers, you could put your market order one tick above this signal bar right here. Prices would have gotten you into the trade. Your stop loss is going one tick below, and you could potentially be looking for a scalp here. But I think as you see overlapping bars, I would have skunked this trade. I wouldn't have kept my order this long in the market. But if you decide to just place the order, walk away from the computer, prices never come back down to your stop loss, and you would have gotten that scalp. So, if you slide the chart over here, you'll see this is kind of what you're looking at. Second entry short triggers, you're in that trade. That's looking really good. But then once you start getting this congestion, it's like, no, we got to figure out a way to get out of this trade. But it does end up working out, and that's where I'm going to end today's video. I appreciate everyone that's been watching these videos and have been appreciating the content. Because it's a long weekend, I probably won't be trading on Monday, and I have to work a few days next week. So next week's posting schedule might be a little bit off, but feel free to watch some of my other videos, ask questions, leave comments. Don't forget to leave those likes, subscribe to the channel. And again, I appreciate all your support. Thanks for watching. I'll see you next week.